Did you know that only a small fraction of dividend stocks pay dividends monthly, and those stocks can supercharge your passive income streams? In today's uncertain market, finding reliable monthly dividend stocks across the U.S., UK, Canada, and Germany can be a game changer for retirees and income-focused investors age 45 and above. In this video, you'll discover the top monthly dividend stocks from 4 of the world's strongest economies, with strong payouts, growth potential, and stability you can count on in 2025 and beyond. I'm going to walk you through the best dividend stocks from each of these markets, carefully selected for their consistent monthly income, market strength, and promising outlooks. You'll get a detailed look at each company's financial health, dividend yield, and future growth drivers, so you can invest smarter and build a steady income portfolio that stands the test of time. Whether you're new or experienced, this is your roadmap to dependable monthly dividends in 2025. First is United States Realty Income Corporation, ticker O, U.S. monthly dividend powerhouse. Company intro: known as the Monthly Dividend Company, Realty Income Corporation is a leading real estate investment trust REIT that specializes in retail, industrial, and office properties primarily across the U.S. and some in the UK. With a reputation for reliability, Realty Income has become a favorite for investors looking for consistent passive income, thanks to its unique monthly dividend payments. Stock price: around $55.92 per stock. Market capital: approximately $50.52 billion. Dividend yield: about 5.65% paid monthly. 3-year performance overview: despite volatile markets and rising interest rates, Realty Income stock has demonstrated resilience. Over the past 3 years, the share price has appreciated about 15%, reflecting strong fundamentals and investor confidence. The company's ability to maintain steady growth even in uncertain times highlights its defensive qualities. The diverse portfolio of over 11,000 properties leased to thousands of tenants helps mitigate risks tied to any one sector or geography. Key growth drivers: Realty Income's growth strategy centers on acquiring high-quality commercial properties with long-term leases that provide predictable cash flows. Expanding its footprint in the UK is another key driver, allowing geographic diversification. The company's disciplined capital management and strong balance sheet support continued monthly dividend payments, even during economic downturns. Analyst sentiment and outlook: analysts are generally positive on Realty Income, citing its consistent dividend track record and strong tenant base. While rising interest rates may pressure the REIT sector, Realty Income's lease structures and diversified portfolio provide a cushion. It's viewed as a reliable income stock with moderate growth potential, making it ideal for conservative investors focused on monthly income. For those looking to build a dependable, long-term income stream in 2025, Realty Income remains a must-buy pick in the U.S. dividend stock universe. Second is Imperial Brands plc, ticker IMB, UK's high-yield dividend giant. Company intro: Imperial Brands is a major UK-based multinational tobacco company. Despite the tobacco industry's challenges, including regulatory pressures and shifting consumer habits, Imperial has built a reputation for delivering some of the highest dividend yields in the UK market. The company is also investing heavily in next-generation vaping and heated tobacco products, seeking to diversify its revenue streams. Stock price: around £2,792 GBX. Market cap: £22.96 billion GBP. Dividend yield: about 5.37% paid quarterly. 3-year performance overview: over the last 3 years, Imperial Brands has maintained a stable stock price, with limited growth but exceptional income generation. The stock stability in a defensive sector is a strong draw for investors focused on yield, especially given the company's consistent quarterly dividends. Key growth drivers: Imperial Brands is pivoting toward reduced-risk products like vaping and heated tobacco, which are expected to grow rapidly. This strategy helps balance the decline in traditional cigarette sales. Its wide global footprint and operational efficiencies ensure steady cash flow, enabling the company to maintain generous dividend payments. Analyst sentiment and outlook: while growth potential is limited by industry challenges, analysts appreciate Imperial's high dividend yield and efforts to innovate, the stock remains an attractive option for income investors who value steady payouts over capital appreciation. Imperial Brands is expected to continue offering a strong income stream throughout 2025. For UK investors seeking dependable dividend income with exposure to the evolving tobacco sector, Imperial Brands is a top pick. Before we dive into our most exciting pick, here's a quick reminder. These 5 stocks are not just about dividends. They're all positioned to benefit from major trends like AI, energy transition, and digital innovation in 2025. So, stay tuned because the next stock on our list is an energy infrastructure company that's set to completely transform the market and could be your biggest winner this year. Like, share, comment, and subscribe if you're enjoying this video. Watch till end. Third is Pembina Pipeline Corporation, ticker PPL, Canada's reliable energy dividend stock. Company intro. Pembina Pipeline Corporation is a leading Canadian energy infrastructure company operating pipelines, processing facilities, and storage assets primarily in North America. With energy demand expected to remain strong, Pembina is positioned as a stable dividend stock in the midstream sector, offering monthly income to investors. Market capital, $30.19 billion CAD. Stock price around 51 Canadian dollars and 93 cents. Dividend yield, 5.45%. 3-year performance overview. Pembina's stock has experienced steady growth over the past 3 years, appreciating around 25% amid fluctuating energy prices. Its diversified asset base and strategic expansions have helped it weather volatility, while consistently increasing dividend payments have attracted income investors. Key growth drivers. Pembina benefits from long-term contracts and fee-based revenues, reducing exposure to commodity price swings. Its ongoing investments in expanding pipeline capacity and processing facilities cater to rising demand for oil, natural gas liquids, and clean energy transitions. Monthly dividend payments and a strong cash flow profile make it attractive to investors seeking passive income. Analyst sentiment and outlook. Analysts have a positive view on Pembina, highlighting its resilient cash flows and commitment to dividend growth. While the energy sector faces environmental scrutiny, Pembina's investments in cleaner infrastructure and efficiency improvements support a sustainable dividend outlook. It remains a core holding for Canadian dividend investors in 2025. Fourth is Siemens AG, ticker SIE, Germany's industrial tech dividend leader. Company intro. Siemens AG is a global powerhouse in industrial technology, headquartered in Germany. The company is deeply involved in automation, electrification, and digitalization across sectors such as manufacturing, energy, and healthcare. Siemens combines stable dividend payments with strong growth potential driven by digital transformation trends. Stock price, around €217.50. Market cap, approximately €174.00 billion. Dividend yield, about 2.25% paid annually. 3-year performance overview. Siemens stock has shown solid growth over the past 3 years, increasing nearly 40% due to strong order backlogs and digital innovation. The company's broad diversification across industries has helped it navigate economic ups and downs, delivering value to investors. Key growth drivers. Siemens is capitalizing on the global shift towards Industry 4.0 and AI-driven automation, offering products and solutions that improve efficiency and sustainability. Its digital software portfolio and smart infrastructure projects fuel future growth. Siemens also focuses on maintaining steady dividends, rewarding shareholders while reinvesting in innovation. Analyst sentiment and outlook. Analysts are optimistic about Siemens, emphasizing its leadership in industrial digitalization and stable dividend policy. While economic cycles can affect industrial firms, Siemens' innovation pipeline and diversified business model support long-term growth and income stability. It's considered a top German dividend stock in 2025. And the last stock is Microsoft Corporation, ticker Microsoft, U.S. tech giant with growing dividends. Company intro. Microsoft needs no introduction. As one of the largest technology companies in the world, Microsoft has evolved from a software giant into a cloud computing, AI, and enterprise services powerhouse. Its consistent innovation and expanding ecosystem make a favor among growth and dividend investors alike. Stock price, around $458.74. Market cap, over $3.41 trillion. Dividend yield, about 0.72%, paid quarterly. 3-year performance overview. Over the last 3 years, Microsoft's stock price has surged approximately 80%, driven by explosive growth in cloud services, Azure, AI developments, and strong enterprise demand. The company's shares have outperformed many peers, reflecting solid revenue growth and profitability. Key growth drivers. Microsoft's AI investments, including integrating OpenAI's technology into its cloud and software platforms, position it at the forefront of the tech revolution. Its dominant cloud infrastructure, expanding Office 365 subscription base, and gaming Xbox ecosystem provide multiple growth engines. While its dividend yield is modest compared to traditional dividend stocks, Microsoft's steadily growing dividends combined with capital appreciation make it attractive for total returns. Analyst sentiment and outlook. Analysts are overwhelmingly bullish on Microsoft, highlighting its innovation leadership, strong balance sheet, and recurring revenue model. Expectations for continued AI-driven growth support positive long-term price targets. Dividend growth is expected to continue, rewarding investors over time. For tech-focused investors seeking a blend of growth and income, Microsoft remains a must-buy stock in 2025. Let's do a quick recap of the 5 high-yield dividend stocks from around the world that are perfect for monthly or consistent income in 2025. 1. Realty Income. The legendary U.S. already known for paying monthly dividends, a rock-solid pick for consistent passive income. 2. Pembina Pipeline, PPL to TO, Canada's energy infrastructure giant with a high yield and stable, long-term cash flows. 3. Siemens AG, SIE.D, Germany's industrial tech leader innovating in automation and AI with a solid dividend policy. 4. Imperial Brands, IMB.L, UK dividend powerhouse in the consumer staples sector with high yield and value pricing. 5. Microsoft, MSFD, the U.S. tech titan blending AI innovation with consistent dividend growth, a perfect combo of growth plus income. If you found value in this breakdown of global dividend opportunities, here's what to do next. Like this video if it helped you discover a new stock. Subscribe for weekly dividend and growth stock picks. Drop a comment below and tell me, which one of these 5 are you buying first? And don't forget, there's a playlist at the end and packed with more high-yield and AI-powered stock ideas. If you're building long-term wealth through passive income, that playlist is your next stop. Thanks for watching. I'll see you in the next one.